Joining us now is Jens Nordvig, founder and CEO of Exante Data. Jens, this came from the ECB's Villeroy. He said this: I wouldn't deduce from what has happened in recent days that there is an ECB calendar that corresponds to an underlying calendar of markets. Went on to say there were perhaps reactions that were very high and too high in recent days. What do you make of that, Jens? Is that the ECB pushing back a bit here?
Well, so the ECB clearly signaled that a shift is coming, right? So the question is how big that shift is. But I think we have to put in perspective here. We've not had ECB tightening since 2011, really, right? So if the ECB is heading to proper tightening this year, it's a historical thing. And we can discuss whether they're going to be ready to raise rates in September or December, what the specific timing is. But I think the bottom line is that this is going to be a year of big change for the ECB. And the sort of tweaks in the communication are tactical around that.
You think it could be a year of euro outperformance, Jens? What's going to drive that?
Well, so when the ECB first went into negative interest rates in 2014 and then did their first ever QE in 2015, we had very, very pronounced euro weakness, 20% against the dollar, but also very significant moves against other global currencies. So the euro has kind of been on a almost like long-term hangover from those policies since then. And therefore, if there's a reversal, it could be very, very important.
Yeah, as I look at where we are, and let's go to Denmark, which has to deal with what we see with your Denmark, with what they have to deal with Lagarde, the big countries like Germany. And I'm going to nail this, John. Hvorfor den neutral kurs? Jens, where's the neutral rate? We don't have a clue, do we?
I think that's actually a very key part of this cycle.
Better in Danish, too.
Yeah, your Danish was a little bit unusual, actually. But the one thing investors are searching for is some clue about what the terminal rate is, right? So essentially what you've seen happening in yield curves around the world over the last couple of months is that we've been willing to front load a lot of tightening. We've seen in the US, we've seen in the UK, and we're starting to see it in Europe, right, where the ECB is priced to hike 50 basis points this year. But what the market has really not been willing to do is to say, okay, this is going to be a sustained tightening cycle that takes policy rates to relatively higher levels, perhaps higher than they were in the previous US cycle, right? And that's because there's this ingrained doubt that the market can take any hikes at all. And I think that's the debate that's still out there, and that has not been changing just because we have been pricing in aggressive Fed tightening. We still have low terminal rate. And is there a lot of good academic work on what the terminal rate really is? No.
Yeah.
So
yeah.
I think this is something we're all searching for.
Jens, there's a debate right now about the path to dollar weakness in terms of the euro gaining steam in the front loading in the U.S. Will the front loading lead to a weakening in the U.S. economy, or will it lead just simply to the Fed to back off and allow a slow, gradual normalization, a sort of Goldilocks scenario that a lot of people are hoping for?
Yeah, so the first thing I would say is that we've been pricing just incrementally more hikes, right? A couple of months ago, we barely had one hike priced, and now we're sniffing at 5, right? So we're moving pretty fast. So if we kind of knew that this limit to how much would really be realistic, whether it was 5 or 6, then we could kind of say, okay, that Fed support for the dollar is going to be short-lived, and eventually there's going to be other factors dominating, stronger global growth and so forth, ECB tightening. But the problem is the ECB is sending a signal, but at the same time, the Fed is not willing to say, okay, too much is priced. We've not had any pushback on market pricing from the Fed, and we continue to price more and more. And I think we could certainly be on a path where we have consecutive hikes in March and May, right? And then the market will think about a 7-hike scenario. It's not going to price it fully, but we continue to price incremental hawkishness, and that's sort of been part of the reason why we haven't been able to see the dollar stop rallying. Can I make one more point?
Of course.
Yeah, the issue, I think, for the U.S. outlook is essentially the point that Lisa made in the introduction around real wages, right? So we are at a point in the cycle where inflation is a major issue. The Fed is responding to that. But if you look at the real economy, disposable income growth is heading into trouble, right? So growth expectations are actually coming down. You can look at Bloomberg consensus, been coming down for like 9 months now. So from that perspective, at some point, the growth effect is going to start to worry at least some people on the FOMC. And that could be really important for the turn in the dollar.
Just finally, since I let you go a little bit longer, can you teach Tom some Danish? Some proper Danish, Jens. Just give him a line. Just give him a line.
Eric Nielsen emails in and says, don't even try.
It's not an easy language. It's spelled like it was 500 years ago, and
so that's
you
a
can't
no.
even read it.
He can't help Tom.
Let me frame that from earlier this morning, though. Your Danish is unusual. Jens Nordvig of Exante Data. Jens, thank you very much. Tom, what were you trying to say? Where is the neutral rate?
Where is the neutral rate? Nobody knows. And what Jens said, folks, let's be serious here. He's one of the greatest young academics we have on Europe. His book was titanic a decade ago. John, this is real simple, and Nordvig said it. We don't know where the terminal rate is on anything, and that's why we're flying blind every morning.
I can't believe that book is 10 years old already, Tom. That's quite frightening. Time has flown by.
8 years,
I think it
10
is that
years,
long. I think it is that long.
Yeah.
My second point here, Lisa, just to make it very simple for the people who don't really understand outside of this world what we're talking about here, just how far the ECB can take things, how far the Federal Reserve can take things before ultimately they have to stop.
Yeah, before something breaks and the yield curve's flattening or not setting a good signal. I will say, though, Tom, you should write a book. Just what is the terminal rate? We don't know.
In different
every
languages.
language. Yeah, in every language around the world. Exactly.
Thank you.
Your Danish is
unusual. I'm right there with Mark Crumpton.
Futures up 31 on the S&P, up 0.7%.